And we have two great guests on both sides of the story. First off, Daniel Tannebaum has partnered Oliver Wyman and a senior fellow at the Atlantic Council, and Bob McNally, president and founder of Rapidan Energy Group. Bob will get to you in just a second. Let us start with Dan. He is an expert, one of the world's leading experts on sanctions. There currently are semi-sanctions on Russia, Dan, correct? Can you lay it out cleanly? Where are we now, and what might happen if things go poorly?
Well, Brian, there's a lot of sanctions that have been layered onto Russia over the last 3 years. Now, it's important to note that President Trump hasn't imposed any new sanctions on Russia since he's been in office, and there really hasn't been any enforcement of existing sanctions. But you've seen attempts to try and cut energy revenue going back to Russia with an oil price cap. But for the most part, there's still a lot of business that's legal between the U.S. and Russia. The U.S. bought $3 billion in goods from Russia just last year. So they're not as isolated as people may realize.
Yeah, and go into that a little bit more, because it was an excellent piece in the New York Times yesterday morning. We talked about it yesterday on the show with Halima Croft about how Russia they're not booming, but they have enough money that they're able to pay soldiers to go fight, and a lot of them to go die. Where is Russia getting most of its money these days? How do they have it?
They're getting its money from India, that still buys 40,000 kilotons of oil. China, that buys about 25,000 kilotons of oil a quarter. They're still getting it from the countries that continue to purchase their oil and taking advantage of the depressed price that Russia has to sell it at because of the restrictions. So if you focus on getting the countries that are buying Russian oil at scale to make a choice, you begin to erode the revenue they have that they're using to directly fund the war in Ukraine.
And we'll get to more on the energy side with Bob in a second. Is there some other type of sanction, Dan, that might work, not on energy, not on oil, not on natural gas? They're already cut off the Western financial system for the most part. Is there something we could do, if we had to hit them in the wallet enough where they basically run out of money and therefore have to sue for peace because they have no way to continue this aggressive operation?
I mean, more broadly, they can impose secondary sanctions, which would force countries to choose between doing business with the U.S. and doing business with Russia. The one thing, though, that the president could leverage is the bully pulpit. As we've seen, he's very good at applying pressure on CEOs, on companies, particularly American ones. If he turned that on foreign businesses that are continuing to play both sides, it may force them to reevaluate their trade relationships with Russia, again, separating them, isolating them even further.